Previously, we looked at how to identify potential short setups, when to begin monitoring a stop, and the key macro factors required for a high probability trade. In this video, we will focus on timing and execution. We break down the exact moment to enter a short position, focusing heavily on how to analyze the characteristics of the rally leading up to your entry. We have split this video into two quick parts. Part 1 covers the anatomy of the rally right before the breakdown, so you know what an exhausted move looks like. Part 2 is all about execution, the exact moments and triggers to look for when pulling the trigger on your entry. Let's begin with the technical characteristics of the pre-entry rally, the specific move that occurs right before a proper short sell entry. When analyzing this final push upward, we are looking for very specific volume behaviors that signals the rally is artificial. First condition is below average volume. You want to look for the stock to rally back above its 10-week moving average, or in some cases its 40-week moving average, but on below average volume. This immediately tells us that institutional buying power is lacking. The price is drifting up simply because selling pressure has temporarily paused, not because true demand is returning. In some cases, the stock will initially break down below the 10-week moving average straight out of a heavy overhead supply zone. However, notice how the volume fails to surpass the breakdown week. Instead, as the stock stages its final week rally back toward or slightly above the 10-week line, the volume actually declines on the way up. This combination of rising price and falling volume proves the rally is completely hollow, setting a perfect stage for the stock to abruptly reverse and break down on massive institutional volume. Alternatively, you could see stalling price action on increased volume during this pre-entry rally. Instead of moving up, the price churns. It tries to push higher but ends up closing midway through, or even in the lower half of the week's price range, all on heavy above average volume. This behavior is a massive red flag. It indicates institutional distribution. Large players are actively using the retail-driven rally to dump massive blocks of shares into the buying hand, effectively capping the stock's upside. The second technical characteristic is all about location, specifically where this pre-entry rally actually takes the price. While analyzing the volume signatures as the stock drifts above the 10-week moving average is crucial, the setup becomes significantly stronger when there is recent cluster of heavy trading or overhead supply, sitting just above the current price. It is even more powerful when the stock fails to push above its 40-week moving average, which is equivalent to the critical 200-day moving average, right at this area of overhead supply. This confluence of major moving average resistance and physical overhead supply creates a dual pressure zone. When the price hits this wall, institutional selling is highly likely to accelerate, sending the stock tumbling downward. Now that we know exactly what structural clues to look for during the pre-entry rally, let's talk about the actual trigger to enter our short position. Once you have witnessed that weak, low-volume rally or a high-volume stalling action, your eyes should be glued to the 50-day moving average. Our entry trigger is a clear, high-volume breakdown below this 50-day line on the daily chart. Here's a crucial tip. Sometimes on a weekly chart, the high volume of that breakdown can get smoothed out or obscured. That is why zooming into daily chart is non-negotiable. On the daily time frame, that sudden influx of institutional selling will stand out like a sore thumb, validating your entry trigger with a high volume violation of the 50-day moving average. Another highly effective trigger for a short entry occurs right at the confluence of the overhead supply and the 50-day or 200-day moving averages. If we see the stock continuously rejected 2 or more times as it attempts to penetrate this resistance zone, you can scale in with a half position. You then add the second half of your position when the stock officially violates the 50-day moving average on high volume. This tiered entry gives you a vital risk cushion. Keep in mind that even though we are splitting the execution, this entire process represents a single, unified short sell setup, meaning you should never size larger than your standard single position risk parameters for the overall trade. In our last video, I shared a few of my recent short positions. Today, let's do a deep dive breakdown of one of them, AppLovin, APP. AppLovin was a powerhouse leader in the previous bull cycle, advancing rapidly and forming four distinct bases on its way up. However, inside that fourth base, the stock decisively violated its 10-week moving average on massive volume. That structural crack is exactly what landed the stock on our short sell watch list. At this stage, we are actively monitoring the asset, but keep in mind, we don't have a short position yet. Following the initial breakdown, the stock attempted a rally back above the 10-week moving average and into that heavy overhead supply zone, temporarily reclaiming both its 10-week and 40-week moving average. It then dipped below them, staging one final deceptive rally. Look closely at the chart here. Notice how the price completely stalled on increased above average volume. The buyers were totally exhausted. Immediately after, the stock reversed hard below the 10-week line on massive volume, giving us our definitive short sell trigger. Pay close attention to the short foot percentage heading into the trigger point. Notice how the multi-month trend is aggressively declining. With short interest drying up, there's no major buying fuel left to ignite a short squeeze, completely clearing the path for the price to collapse. As I always emphasize, the ultimate golden rule in execution is absolute patience. From that initial breakdown to our actual short trigger, this setup took a full 6 months to mature. That brings us to the end of video 2 in our short selling module. You now know how to identify and monitor a high probability short setup, analyze short flow dynamics and volume requirements, read the structural characteristics of a pre-entry rally, and execute your entry with proper position sizing. To help you master these concepts, I've included a link in the description below with all the chart studies and extra deep dive details from today's lesson for your own study. Make sure to review those examples, because in the next video, we'll pivot to the defensive side of trading, covering exactly how and when to take profits alongside comprehensive risk management. Prepare your watch list and I will see you in the next video.